Hi and welcome. I'm going to talk today a little bit about the construction news and finance update. I want to give you some trends, things that are happening now, things you can expect to happen in the future, and ways you can prepare. I'm going to focus this primarily for subcontractors and general contractors, private development, folks that are working on government projects or bonds or projects that are funded by municipal bonds or other government agencies. Those are the types of clients we help, so I'm going to focus our commercial update on that specifically. My name is Scott Peper. I'm the CEO and co-founder of Mobilization Funding, and I look forward to giving you this information today. First, let's give a brief overview. Today, in these markets, what we're seeing a lot of is banking changes, regulatory changes, uncertainty. Those things all create a tremendous amount of stress in the system. So your traditional markets of the last few years, we've seen really cheap access to capital. So think about it from a private perspective. If you're a developer, you've had a lot of opportunity to raise money in the form of a loan from a bank or even private equity. You've done well for the last 5, 6, 7 years. If you've done your projects, you have a good system for them, and your access to capital has been very good. It's also been at the lowest, some of the lowest historic rates for over a decade now. Well, all of that's changed in the last year. Those rates have now gone up 100% in some cases, in most cases, some even more. So the access to capital for a developer from a bank has been tremendously more expensive. And that extra cost over the course of a private development or commercial development significantly increases the cost of the overall project. In some cases, and in many cases, it actually makes the project not worth doing anymore. So some of these projects that are already out of the ground, those developers are stuck and they're going to finish them. But they're also going to be finishing these projects either over budget or a less of a margin than they thought they were going to make. The end use for the product, whether they keep it or whether they were to sell it, it also has implications from the interest rates in the banking environment. If it was a developer that was expecting to build this project, finish it, and then sell it, and they're not able to sell it for the same value or more than they were before, it's actually less, or they were going to have to now keep this property, there's a whole different business dynamic there. And that will have a trickle-down effect for those of folks that are working on that project. So those are things to consider. Governments have been they've raised their funds through taxpayer dollars. Sometimes they sell bonds. Sometimes you have private-public partnerships, which may be called PPP type projects. Those public-private partnerships, those projects can have all different types of funding and all different types of tax benefits or not. And so you have to be really careful when you're working on a project or taking on a project now, that you can decide and determine where exactly the funding for the overall project is coming from, what implications that are different today for that developer or that government or municipality, and make sure that you know that that money is set aside, allocated, or already pre-funded such that that budget is concrete and you can move forward with it. If you're working for a general contractor or a prime that's connected to that government project and they put a hard bid on that project a year ago, you have to know that that hard bid is going to be a tough requirement for them to meet in the same economic environment. Now, they may have been able to mitigate those risks in many different ways. Maybe they pre-purchased materials. Maybe they did all different types of things. But you want to make sure that everybody is sound with the same assumptions that they were coming out of the ground with a year ago, that they've allocated and prepared themselves for what's happening today. Those are just good things to know. So again, let me summarize that. Impact to the banking environment is increased rates. That's had an impact on developers. That's also had an impact on the projects, and it's had an impact on what the end use of the projects may be and how a developer may exit them. If it's a government project, city, state, federal government, or municipality, make sure that those projects are well funded. Money is already set aside. It's already been allocated. And if you're working for a prime that's put a hard bid on a project, or you've put a hard bid on a project, make sure that the assumptions that were made when that project was bid compared to when you're actually coming out of the ground with it, that everyone's been prepared and they understand the new risks they're going into, and have those conversations early up front so that if something's going to get way tighter because of all these things we've talked about, you can be part of the solution, but also protect yourself. Next, I want to talk to you guys about some global impacts. There's a lot of things that are going on out in the environment, the macroeconomic factors that are going to impact construction. Things like an election, things like global wars, things like the price of oil, things like supply chain. And to think that the things that are happening, but big picture inside the US, but also outside the US, isn't going to have an impact or trickle down effect into the construction projects, regardless of whether they're private, commercial projects, or government, city, state, municipality projects. To think that those won't have an impact all the way down to the projects you're working on would be foolish. So it's very important to pay attention to what's happening. That doesn't mean you don't move forward, and it doesn't mean that you don't continue the project. It means that you have to know what the considerations are. For example, if the oil supply globally was significantly reduced from the international side for one reason or another, economic conflict, wars, etc., and the domestic supply is not being produced at the same rate, that's going to have an impact on gas and fuel prices. Depending on the type of project you're working on, depending on who you're working for, depending on what kind of business you're in, those increases in fuel prices or a decrease in the supply, maybe there's just no access to the supply, that could have a significant impact. You want to prepare for that in advance. Things like the election. Look, regardless of what political party you're on or regardless of what you believe, the elections have consequences, and they're going to have impacts for both the economic environment, the banking environment, the regulatory environment. So you want to think about who and where and what is happening in the election process, such that if something changes in a project next year when this election occurs, that any changes in regulatory environment or consistent policies, how are they going to impact your projects? How are they going to come out of the ground? If you're bidding work that's not going to come out of the ground for a year or more, then that's going to be an influential factor. And so you want to think about those things. Secondly, and in the same vein, when it comes to the election, you want to make sure that you're following the process, not from the news or from other places, but talk to your local professionals. Find out how those local elections are going to happen and impact you just as much as the national election. The national elections get a lot of attention, but the local elections are going to matter much more to you and have a way bigger impact. So pay attention to those just as much. Don't get sensationalized by the national elections that are occurring, when reality is the local elections are going to be the ones that are going to impact you and your business the most, particularly in the environments where your projects are going to be. And then there's inflation. Well, we've all been dealing with inflation now for the better part of a year, if not more. There's going to be more interest rate hikes. It looks like the Fed's coming out with another interest rate hike sometime between now and the end of the year. We're all pretty accustomed to this, and we've seen these price increases. Hopefully now you've made adjustments in your supply chain, you've made adjustments in your purchasing, you've made adjustments in all aspects that you can possibly do to make sure that you're adjusted for not only your team and your employees and what that inflation impact is for them, but also the inflationary impact that it's had for you and your business. If costs increase, you've got to increase your price. If costs are going to continue to increase, you're going to have to consider continuing to increase your price. And that's going to mean for most of our clients and subcontractors out there, that's going to have to get you comfortable with a typical mental block, which is passing on price. If you just continue to bid and try to keep the same pricing and squeeze yourself, it's going to put you in such a tough spot that it's going to make it harder and harder and harder for you to succeed. And that's not what we're trying to do here. You want to be successful. You want to continue to move your prices on. If you have a higher cost, you got to pass them on. If you want to mitigate some of those higher costs, make sure you're putting the right contractual language in your agreements. But also you can pass on material to the owner, maybe do more owner direct pricing or more owner direct purchases. You have to figure out a way that you can keep your business sustainable and still thrive. And increasing your price is a mental hurdle that a lot of folks are going to have to overcome. Let's transition now and talk about the financing on these overall projects. What are the things that you can focus on as a subcontractor or even a general contractor as you start to bid projects and you want to take on projects with certain developers? Well, let's start at the top. If you're the bank and you're financing these projects, who do they want to work with? They're going to have to continue to lend money, but they're not going to be as aggressive in doing so. So they're going to go what they would call up market. What upmarket means is they're going to start to lend only to the best of the best developers, the highest credit-worthy developers they can actually work with, and the ones that they're accustomed to. That means that those more newer developers or developers that were doing lots of projects, but they were in a smaller capacity, they were considered maybe a little more risky. Those projects that fall into the developer's range or the bank's range of the developers that are doing a little bit more risky projects, they're not going to be lending to them shortly, if not soon. I actually spoke to one of the bankers that we're close with recently, and he said, look, there's a mandate coming down from the top that states they don't want to do a lot of commercial private real estate deals, things that they call were right down their lane, singles and doubles. They don't want to do them. They're trying to do less of them. Why is that? I don't know. Great question. But banks are seeing something from a financing perspective that they see too much risk in it. Now, they could be wildly wrong, but at the end of the day, that's an impact. Whether they're wrong or right, it's going to be an impact that could hurt the construction project financing industry, but also more importantly, the subcontractors and general contractors that are serving that world. It's not something you typically think about, but it's something you want to start thinking about moving forward from today on. As you start these new projects or you're thinking about the projects you want to bid, you got to pay attention to the banks and what the overall financing sources are and how that's going to impact. So bid work that are with the best of the best developers. They're going to be around. They're going to continue to put projects out of the ground. But the local, more regional developers, they're going to have a harder time getting financing. So the same great projects that they might have wanted to do before, of course they can execute. It doesn't mean they can't. It doesn't mean they won't be able to, or it doesn't mean they shouldn't. It just means they might not have the same access to financing, or their financing may cost a lot more, which is going to put a hurt on the project, and it may prevent the project from coming out of the ground. And if you're looking at your work in progress and you're planning your business and you're thinking and hoping a project that you want is going to come out of the ground and it gets delayed or doesn't come out of the ground for some reason, like we just talked about, that can hurt your business. So the things you can do is start to bid more work, or make sure you're bidding work for the best of the best developers, because if those are the ones that are going to continue to get financed by the banks. While we're on top of the banks and we're talking about them, let's talk about the banks that are financing you. For those of you that have bank lines of credit, ABL lines, invoice factoring that's funded by a bank or private, here's what you want to be able to think about as it relates to the banks. All of these funding sources have a funding source for them as well. Maybe it's the federal government, the FDIC for the Fed passing on dollars. Those rates increase, they increase to them. What happens there? They may have more appetite for risk or less appetite for risk. So these types of things are always being evaluated by the bank. If you have lines of credit or other loans, you want to be bulletproof. What does that mean? Well, bulletproof means you want to be paying attention to what all your loan covenants are. If you have certain loan covenants that they weren't so strict on before, or that maybe you don't even know exist, get into those loan agreements, find out what your loan covenants are. Make sure that when you test your financials, that you're meeting those ratios. And if you're not, do everything in your power to get within your loan covenants and stay consistent. Just paying your loan on a consistent basis and making those payments, regardless of how long you've been doing it, doesn't mean that you're totally protected and safe, because those loan covenants those ratios of maintaining financial ratios have a big impact, and you can be in a technical default although you're still paying and doing everything. And the banks can use those technical faults to call your loan or term your loan out for any reason that they choose, if that's the case. And you don't want that to happen. Again, doesn't mean you did anything wrong. Doesn't even mean they want to. It just might mean that the banks there's an impact to the bank overall, and maybe the type of funding they're doing, they need to do less of, and you might fall in that bucket. Again, doesn't mean you did anything wrong. Doesn't mean your banker did anything wrong. And it doesn't even mean the bank wants to do it. They may have to do it. But you want to be bulletproof. So if you have to submit your financials on a monthly basis, submit them ahead of time. If you have bank statements you need to submit them ahead of time. If you have these loan covenants or you need to be in these financial ratios, make sure you test to them and that they're accurate and you're meeting them. If you're not, give the bank information that here's how you're making sure you're going to be within those ratios in the next month or 2 months or 3 months, and work towards that. Again, be bulletproof. We're going into an environment that is a little uncertain. It's a little unknown. And so being bulletproof is the best way to protect yourself in this scenario. That's my financial news update. We've talked about the impact to banks. We've talked about the macroeconomic factors. We talked about the microeconomic factors in your market. We talked about the things you can do to keep yourself bulletproof. I hope you go back and use this video as a resource. The intention here is to say there's a lot of opportunity. This is not me to scaring you or me giving you this fear factors you should have. I'm just trying to give you good information from the sources and information that I have and the people we talk to on the street, our customers, our clients, our potential customers and clients. We also talk to our banks, attorneys, professional services. Be bulletproof. Use this information as a tool for yourself to be able to prepare. This is not a scare everybody to death. This is actually an empowerment tool. I want you to take this advice, test it in your own markets, talk to your own bankers, talk to your own colleagues. And if you liked it and it's helpful, I hope you click subscribe and share it with your friends. Thank you all, and God bless you.